Good turnaround Tuesday, Warriors. How are you? Are there going to be any reversals today? Nobert, welcome to Face. We think you're new. You'll like it here. Hi, Saloom. Same to you. Hi, Blake, AJ, Ran. There's nothing really stormy about the markets yet. Hi, James, Kman, how are you? Sinatra. Ryan, well, welcome back, young man.
Thanks, mate.
I'm counting. Someone's counting on don't count on anything. Anyway, I'm going to count on Ryan to tell us, don't eat all that ice cream, Kurt. You know, don't do it, man. Don't eat
Do it.
ice cream and trade. It's
Do it.
dangerous.
Do it.
All
Do
that,
it.
all that sugar, man. You'll get FOMO. All
Give you
right,
one of them ice cream headaches.
enough of that. Okay, so here we are, Ryan. Welcome back. You think there's anything worth taking counter trend? Like, the dollar's had a pretty good decline. Um, it's a time to, can the yen generate something here? Um, or do you just
Yeah.
sit back and wait for breaks? What do you do?
I
Are you
think.
doing anything yet?
No, I'm in a couple of positions. I grabbed Kiwi dollar last week after the RBNZ purely because I
Okay.
thought US dollar selling would continue. I think we're setting up though for the potential for dollar reversal into over POW now
Okay.
because I think the market's going too far. I just had a quick look before the show started. We all the FOMCs this year, bar two, the dollar has sold off into the FOMC. This Jackson Hole thing, it's like an FOMC mini, if you like.
Right.
It's not a rate
Right.
decision, but it's everyone's waiting on what Powell's going to say type thing.
Okay.
So I
Any
think we
level,
might get stretched.
so you're going to do it with the dollar. What particular currency will you look to fade against the dollar?
There's two on my radar. First is dollar CAD, which I'm already trying small. I'm buying into this support zone down here, the
Right,
big
36.
136. Yeah,
Yeah.
so I'm going in small there,
Okay.
and euro dollar as well. This 111 is a big level, and we've got an even bigger level above at 112,
Okay.
which marks sort of the wider 110, 111 range down to 105. So it's a really big level. And I just feel, we're just below 111. So there might, if there's a bit more dollar selling to do and we get to Powell and, we're going to cut, but we're going to take it slowly, 25 pips, blah, blah, blah. I think that puts maybe a turn in the dollar and we see a little bit of dollar strength. Don't expect that to last though.
Okay. All right. Well, interesting strategy. Thinking it's going to come down. So you think most of this is going to go down on Friday?
Possibly, yeah. I think
All
it
right.
could
Well.
do. How far though is the question,
Okay.
because I don't think the market's quite ready to give up selling dollars right yet.
Well, okay. I kind of had a zone that would be, I don't know. I had 101.50 to 150 here,
Yeah,
and the confluence, and we know big round numbers are important, right?
yeah,
So the big round number in the dollar is par, and I have some confluence with this. This is the 200 week moving average here, so I think this is a battleground, but it may not get down here. It stopped above it here and here, but
I
101.
think those are the good levels to watch though, Dow, because they mark decent moves, highs and lows, ranges. You've always got to ask the question: what's it going to take for the dollar to keep selling off? It's going to take a collapse in the data,
Yeah.
more than what we've got already, and the Fed to be far more dovish than they've been all year. If that's not going to happen, then you've got to pick your bigger levels, your bigger battlegrounds to and trade them.
Okay. I'm bearish Canada, right? From last, I made a Nostra Pinkert call of 125 by the first quarter. Um, just using different anticipating breakdowns.
Mhm.
It's just, kind of a fairy tale, but it's a technical one. So my technical fairy tale is, eventually we'll take out this 36, and that's going to take it. It really measures back down to these lows, which is kind of a larger fractal of what's going on here. And,
That'll be
just
nice.
under 131 and a half, you're talking, 8. What's that, 23, 24? So anyway, that's longer term. That's really going to be a dollar massacre, isn't it? It looks like we're setting up for a dollar massacre, even if we get a rally back to 103. Um, doesn't that feel that way to you? That we've taken all this time, moving sideways. We've had breakdowns, right? We've
Yeah.
tried to recover. We have new lows. Maybe it's a second drive down here, but I think we're going to flush 100 eventually. Just
Could well do. Yeah, could well do.
just
But
for the
I think that'd be the
hell of
data.
it.
Yeah, I think that'd
Yeah,
be the data that does that sort of move. If we
yeah.
get a really stinky NFP, we'll probably see 100 pretty quickly.
I was thinking about this. I know the markets come back and the S&Ps are probably going for new highs, probably. But there is one thing that I think longer term, it may not matter for a while. In fact, it's a tailwind. This weaker dollar is a tailwind, but a weaker dollar says, you know what? You should be investing in a country whose currency is appreciating. And I talked to a few people, and I guess some of the uh, outside emerging markets, I think South Africa's been exploding, and I forgot what else he mentioned, but some of the emerging markets um, will do better than tech in the S&P. I don't think long term a bear market in the dollar is a great thing for any kind of U.S. dollar denominated asset. The
Yeah,
only thing it's good for is nominally higher prices here in the U.S. and eventually foreign exchange controls if it gets out of hand. you know,
well,
can you
Argentina,
imagine
Argentina
that?
might fall
Huh?
into that. Argentina might fall into that realm that you're talking about, EM currencies, with what's going on over there. I saw a headline earlier that the MSCI might change their benchmarking, put a positive spin on Argentina, which could unleash, I think it was 1 trillion, 1 billion, I can't remember what it was, inflows. So, you'll see the arse gaining, if you
Yeah.
like.
Huh. That hasn't happened in decades.
No.
I guess this guy, they said I saw a little blurb, and maybe we should take a, instruction from it. Rents were really high um, in most of the major cities, and that's because there was, rent control. And once he took off, I forgot, I think it was rent control or something, basically deregulated rental apartments. And all of a sudden, there was a flood of apartments and rents dropped. So
Hmm.
this guy is trying capitalist ideas, isn't he?
Yeah, sort of. Yeah.
Yeah. Okay. We should have a branch there. Anyway, great to have you back. Any comment on the end?
No, that's still just mad as a bag of spiders at the moment.
Okay. All right. Well, glad to have you back here, Ryan. Hope
Thank you, mate.
you recharged your battery. I saw you by the pool doing fancy dives off the board, 2.5 pipe position, and I think you're gonna. I'm for you training for the Olympics in 4 years here in
If they,
L.A. I'll come up. I'll come up and watch you.
yeah, if they give out medals for belly flopping, I'll take gold every time.
All right, so let's go get over to Kay. Good morning.
Hi,
How are you,
Dale.
Kay?
Hello, everybody.
Okay, so your goal is following through here.
Yeah, we're a couple of levels here. of course, we are fresh high, so we can only look at it, extensions and stuff. So there's one right here, 25 and a quarter. There's one at 25 and a half, and then I don't see much actually before mid 26s. And interesting, Blake brought up this revision of the BLS yearly, the first revision of the April to March, April 2024, March, April 2023, sorry, March 2024 job creation, which could actually show a very, very negative number. I think it's part of what's happening in gold as well. It looks to be the instrument right now where you put everything in one bag: lower yields, geopolitics, the dollar also on its own coming off, and gold is really reflecting. I know silver is going up as well, but gold is really reflecting what the market says. We only want to be there. If you look at some at it, I am ahead of, well, that stuff tomorrow, PMI day, and the Jackson Hole. I'm starting to be a bit cautious here. I'm not saying we are going to reverse, but I'm looking particularly at levels 24, 80, 85. If those hold, those prior tops, then I think through Friday, then there's another leg coming. We know people are now already talking about 3,000, but let's take it one step at a time. I'm still holding small, and happy to have it, but I'm a bit cautious with the size of my position right here. So I'm yeah, just waiting with a long and
Okay.
see what happens. Got a very tight stop below that 24.80 in the shorter term, but I'm still constructive longer term, you know.
Gold silver ratio still rolling
Yeah,
over.
yeah.
So
Silver
that
really
changed last
when
week.
yeah, silver actually took over the baton, and I went because I was on holiday then, and I went back to look at numbers. I think the silver is doing pretty well because of take away the jobs data. The rest of the data wasn't really falling out of bed, was it? So I think that's where you got the revival of silver, and unfortunately to say, but wars need silver.
I saw a tweet which talked about the Chinese, aren't buying gold, and it showed what they are buying. They're loading up on silver.
Hmm.
That's the point.
And it's a much smaller market as well, right?
Yeah,
So
yeah. Doesn't
you're
take
going
as
to
many.
have a bigger effect on silver.
Yeah. Okay. So I think we covered a lot of the board. Maybe bring Blake in for risk.
What's happening,
Keep
buddy?
taking it.
And good
Keep taking
morning.
it. That's
Good,
that's it.
good morning. And
Yeah.
Ryan, welcome back, by the way. So,
Thanks, mate.
yeah, so Dale, I mean, they're taking stocks to all-time highs.
Yeah.
I mean, what's going to stop them?
I can't think of anything.
Last week, we sat there and we watched this big reversal. There's a lot of people that are calling this, the ultimate bear trap,
Right.
and
Schwager came out and said that.
what's that?
Schwager came out and called it a bear trap.
Yeah, him and amongst other people. A lot of people
Yeah.
thought that this is a big bear trap, and the thing is we have a Fed chair that's probably going to lean, let the market know on Friday that rate cuts are coming, maybe at a measured pace, maybe not so, maybe not as aggressive as the market may want, but the market may be satisfied just knowing that rate cuts are on their way, and maybe that's the catalyst that drives the stock market to all-time highs on Friday. We were having this conversation about and I'll show you guys a conversation that we were having in the chat room about the BLS and about them adjusting or making their annual revisions to the jobs report. And there are some economists that believe that they could revise those numbers by 1 million, like 1 million jobs, like poof, gone. Where did they go? What, like, how, why are those not accounted for? And as Kman was showing, and I'll show you guys in the chat room, he pulled up a chart historically on what those numbers look like. It'd be an outsized number if they do adjust it by a million. So anyway, that's one thing that could continue to weigh on the dollar and actually could. I don't know how the stock market would respond, but you got the Fed Chair Powell that would have to address that, you would think, at Jackson Hole, because one of their mandates is job creation, and if a million jobs that were supposedly created weren't created, how do you account for that? And something needs to be said. So it could be a really set up for a really interesting Friday speech from Fed Chair. So. Yeah. So, and then as you guys were just talking about, gold's at all-time highs here. The dollar continues to trade really heavy. You've got the dollar Canadian, which is, ahead of the CPI number. Ryan, I know you mentioned that you're picking up some CAD here. But man, this is a really gnarly support. You think there's a risk at this point that they just take out stops below those levels around 136?
Yeah, there's always a risk. Hence why I've pulled the rest of my bids and my sell stop. I'm just running the little bit I've got just for that risk. But, the levels are level until it's not. Look what it did when it held last time.
Right.
There is a bit more risk to it. I said it on the Flow Show this morning. This is one of those times where we got big levels and big events. And so it's going to be where we close the week that's going to be important. We could flush under 135.5, something like that. Over Powell or the CPI or whatever, and come the end of Friday, we're back above 136, and it becomes support again.
Yeah, if you guys want to see, I mean, this is just a huge. I mean, you can go back forever and a day, but look at all of 2024. I mean, a big level on the way up, and then on the way down, if we break, it could be. It could be gnarly, but then the dollar, as you pointed out, the dollar's moved so far, and I'm going to point out just a couple of things about the dollar index, and then Dale, I'm going to go back and talk about this BLS number. So we're below triangle support, and this is one of the things I talked about on the week ahead video. This is the exact situation that if you watch the week ahead video, I said, hey, the dollar looks like it's going to break, but we could very easily get a false breakdown by the end of the week, depending on what Powell delivers. I don't know if Powell's going to deliver what the market hopes he's going to deliver. I think he's going to be, letting us know that there's a rate cut coming. But I guess the question is, and I'd like to hear from Ryan and then Kman as well. Do you guys think that the Fed chair is really going to open the door for, more rate cuts than the market's already pricing? Because right now, and correct me if I'm wrong, right now we are expecting 75 basis points by the end of the year. That's that's 25 in September, 25 in November, and December as well. So does the market need to hear more than that, or
the market wants to hear more than that? It's wanted to hear more than that all year. Hence why every time we've come towards an FOMC or a bit of data, bad data gets hit harder than dollar rallies on good data, because the market just keeps wanting. So I think he's going to do a bit of a pushback in terms of those big over expectations that we saw a couple of weeks ago. I see the market's more balanced now, 75% probability of a 25 pip cut, whereas 2 weeks ago it was 75% for an intermeeting cut. So the market's come back to more balance. So I think he's going to walk the same middle or the tightrope as he does. He's going to say, yeah, rate cuts are coming, but we're not going to rush this unless the data really changes. And really, you've got to go back to the basics. What has changed between the last FOMC in the data and the last message we got from him? And in my mind, a little bit more softer data, but nothing that says you should be cutting 50 pips or even 3 times this year. I think we're probably on for 2 cuts at the pace we're seeing the data at the moment. 3 is a really out there number.
Yeah, and let's stay on that idea and Kman, I want to ask you really quick. I mean, first of all, let me point out some technicals just so everybody sees it. This last like leg while we were in the middle of the triangle, we just hit the 261% extension of this move. You can see it right here, 261% extension. Right here, the last leg higher, we just hit the 127% extension. So there's a nice little confluence. Now, and as I pointed out, we're below, and I'm gonna actually just make that dash and get a little bit less visibility here. We're below like major, what I would consider major triangle support now. So you can see it here, you can see it here. And while we're below major triangle support, this is what everybody's looking at as a dollar breakdown. But if the Fed chair is a little bit more balanced, I would assume that the market's not pleased with balanced. Like, the job's not done yet. Yes, inflation's come down, but we still have, the labor market looks a little soft. I mean, if he comes out a little bit more dovish, or maybe more balanced, excuse me, and not as dovish as the market expects, could we see a reversal from here and end up getting the false breakdown of because this would catch everybody off guard. Think about how many people have been selling dollars over the last couple of weeks. But what are your thoughts here, Kman, on going into Friday?
Well, he may have to rewrite his speech after tomorrow's BLS numbers, but
Right.
yeah, so far I'm also thinking that the market is always a bit too hopeful, and we've seen those swings in markets quite a lot over the past months, right? Even the bond market needs to reprice stuff very often, so it is very possible. And as I said also on the chat, imagine that we don't get like that 1 million revision, but some of the calendars are calling for a 200K revision. May imagine that we only have like 180 or whatever thousand revision. Yeah, then I can see the dollar regaining some strength. But you will have to be selective, I think. And I agree with Ryan on the euro. And the other one that I'm kind of lurking at is that dollar yen. If there's been a lot of selling going in there, and we've seen reports. When I came back, I've seen reports that funds even gone long yen now. If that's really the case, and we get some data and a speech that is not dollar negative, I can see dollar yen spike back higher. Of course, as I said, if we really get that 1 million revision downwards, I think Powell will have to rewrite his speech, because he has been hammering himself for months now that the second part of the mandate, which is the jobs, is on his main line on his agenda. So they
Right.
really revised that
A lot of rewriting going on
Say
everywhere.
again?
Rewriting of speeches going on everywhere.
Yeah, probably it will have to then, because it's that is going to yeah, to see the market sell dollars pretty hard, I think, if that would really be the revision, because of Powell himself as well, telling the whole market it's the main focus right now, because he said for the time being inflation is on its way, but the jobs market is now the one we focus on. So and we've been saying that. I've been saying that a lot of times. I said, like, jobs are more important than inflation right now. And yeah, so we've just added a point of interest to what's going to happen into the whole, so yeah, but personally, I still think it's 50 is a big call, unless we get that huge revision.
Yeah, and guys, this is the ForexAnalytix chat room. If you like, we're having conversations about this like an hour and a half ago, but we've been talking about it since like yesterday. But really, just discussing it from Mark Chandler's on his article. Brought it up. It's like we start having these conversations in the chat room. If you're not having these conversations in a community and talking it out and understanding what is actually happening in the market and why the dollar is as heavy as it is, make sure you're in the ForexAnalytix community or find a community where you can have these conversations. And that's what we do, and that's what we talk about as well throughout the course of the day. So let's cover just a few other things. So the euro, I just want to point out, we did complete this bull flag pattern. We are at the 127% extension. We are, I would argue, at big major triangle resistance right now. I believe only back below 110 would usher in some selling at this point. But between now and Friday, and as we just were talking about, tomorrow's BLS figures might be the catalyst that drive us even higher into breakout territory, or might actually even reverse a little bit of what you've seen here ahead of Powell. But I guess I should also note that the dollar CAD is actually slipping right to the 200 DMA right now. You can see this major support being tested actually as we speak ahead of this Canadian data. So we're expecting Canadian CPI. We're going to get ready for it, obviously. What are the data that we're looking for? Let me ask you, Kman, since you were, and by the way, welcome back, Kman. I think I said welcome back actually the last couple of days. So
Yeah.
if I didn't, I'm saying it again,
because we are coming back to the face every day.
Yeah. You've been here for the last couple of days. But come back to CPI real quick. You expecting any fireworks here with the Canadian CPI?
Well, it could be. I mean, in case you were talking about the positioning, and I've seen it elsewhere as well, and in case it comes in sticky, there's probably going to be a round of stops, potentially taking it down to low 135s on the dollar CAD. But get a weaker one. The Bank of Canada, especially McClem, his tone has been quite soft. So get a weaker number. It could weigh on the Canadian dollar pretty easily. But the dollar is still being sold. If you look at every other currency pair now, the dollar is weaker again. So perhaps dollar CAD is not your best instrument on a weak CPI. Perhaps it's more stuff like I don't know, sterling CAD or anything else against the CAD, because the dollar
Austin's looking at the Euro CAD.
This is from Peter Bookvard, the big picture of dollar weakness. If the U.S. dollar weakness persists, import prices will become a more important economic indicator to watch, as the U.S. economy still has a large trade deficit totaling about $800 billion over the 12 months into June, with the recent 3 months over 70. So, what he's talking about is, everything we import is going to cost more. All right. So there's, if he's just going to drop the inflation mandate, weak dollar makes it easier to service the debt at the expense of inflation, but maybe they don't care.
Yeah. Well, I want to show you something really interesting before I set up for this Canadian data. The Riksbank, they actually cut rates. They are now expected to cut maybe another 2 or 3 times moving forward, and their currency is just ripped higher. And so the dollar Swedish krona. Yeah, I mean, look, you cut rates and your currency goes on a rampage. Just go look at the Kiwi. That's exactly what's happened with the New Zealand dollar. So I know Ryan's been talking about that as he's long New Zealand dollars, but look at that reversal there. And we are, by the way, probing a multi-year trend line. But let me go over to the dollar Canadian really quick. I'm going to pull up the 15-minute chart, just so we can watch this really carefully. And then let me pull up the data flash. This is from ForexAnalytix, and we got about 45 seconds. You can grab that right here on the main page, right over here by the calendar. It's next to the live squawk feed in ForexAnalytix. I'm going to pull up that data flash. Whoops, let me pull up the Canadian, then data flash. There you guys go. All right, and the data should be coming out in momentarily here. So stand by. Well, actually, about 20 seconds. Any last minute comments there? Ryan, Kman, Dave.
I hope Ryan's right, and we get a nice counter trend rally in Canada
There we
into
go.
the next week or so.
Remember, the position is skewed short Canadian dollars more aggressively than I've ever seen in history. So
commercials on the other side.
Inline CPI, one of the cores a little bit softer. BOC core softer as well.
So
gonna pop.
Yeah, I mean, it is a little softer on the year over year data, but the month over month a little hotter. Well, we're getting a little dollar Canadian recovery. I guess that 136 level, maybe those stops below 136 will survive one more day, or maybe they'll survive one more quarter.
Hour.
Well, I mean, if you look at those stops, they've been surviving since May, and maybe they'll survive another month.
You caught the last
they get buried today.
What's that, Ryan?
I thought you caught the last bounce off that 136, didn't you?
I did. I really do believe that if you get back above 136.50, you're going to see some squeezing. But it's hard to buy the dollar too aggressively down here with what's happening. I mean, just look around what's happening with the yen and the euro, but maybe the euro. Oh, it's the EURUSD. Damn it! I didn't buy it this morning.
Process.
Yeah, I was wanting to. This is on the week ahead video. I had orders at 150, but they never got tripped. But yeah, then maybe this is one that pops higher. Who knows? So anyway, well, guys, thank you so much for being here, Ryan. It's really nice to have you back in the fold. I know you're Kman's been holding down the fort on the Flow show, but I'm sure that your regular listeners is nice, probably enjoying having the banter between the two of you guys. So welcome back. I know are you leaving towards the end of the week again?
Yeah, I'm off Thursday again. Thursday,
okay.
Friday. It's bank holiday Monday here in the UK.
Man, we got to get these kids back into school.
Yeah, not long yet. Not long now. A couple more weeks.
My kids have gone back to school literally weeks ago. So you need to get your kids back into school so you can come back and be on the Flow show. Anyway, good to have you back at least for a few days. Kman, thanks for always being here. And Dale, I know you have a interview and so I'm going to pass it over to you, buddy.
Okay, thank you, Blake, Kman, Ryan, Dream Team.
Thanks, mate.
Thanks a lot for your commentary today. All right, so what, Kay?
I said thanks, Dale. We are a team of dreamers.
Okay, hey, you know what? How they say don't quit your day job? I say don't quit your daydream. To keep dreaming. Important to dream no matter what your age is. If you don't have any dreams, it means you don't have any hope. So keep dreaming. So Arnaud Tertier is going to give us hope on how to analyze what's happening in some of the wildest markets I've seen. Arnaud, welcome back. I've heard the expression that markets top with violence and
Morning,
bottom with silence. Are we starting to see, I mean, to me, this looks violent. And before we get going with your analysis, I was wondering what you were thinking when you saw, a more than outsized move in the VIX. It wasn't justified by how much the market went down. It was just everyone on the wrong side. What was your reaction when you saw 60 reading in the VIX?
I remember I did a webcast for my members where I said, there's this famous investor who says, get greedy when the others are fearful and get fearful when others are greedy. And that's pretty much, I can even pull up the slide I had to start off my webcast with it. So that was pretty much my thinking. Though I did give a caveat because that is, of course, by Warren Buffett. And there was a news article that he'd been a heavy seller the previous quarter. But of course, I am pretty sure he sells before things go south. And he's smart and old and wise enough, I'm pretty sure, to do that. So there was a little bit of a conflict news message there, of course. But otherwise, that's, I think, always the message. Get greedy when others are fearful. Even if you're trading for just a bounce, it might work. And
that was you know, I consider that market dysfunction.
Yes, correct. Did. Yes.
I don't think it's a great sign that you know, the VIX didn't trend up to 60, but got it all over, and then the biggest reversal in the same period of time.
Right.
They didn't pay off trades. There's something, you know, rotten out there in the market. Could it be?
Yeah, of course. There are always things going on behind the scenes, shenanigans and manipulation. But also, of course, plays a role. We can have a look at that. But most of the time, we simply say a wave on a larger degree completed to the upside, and then another wave on a larger degree to the downside has to take over. And most of the times, those are C waves. And what we just experienced, which bottomed on August 5th, that infamous Monday, that was most likely a C wave. And they're very fast, and very rapid. We saw them, for example, in February, March 2020 during COVID. That was also a C wave that went very fast and very rapid after a B wave topped. And the market just simply has a hard time finding a bottom. As they say, there is no resistance in a bull market, neither is there support in a bear market. And that's what you saw. And I personally was looking for, if I go back to the NASDAQ, for already July 5th, for a top somewhere around 20,660. I think we got 20,690 now. Don't want to pound my chest on how accurate it is, because I've made plenty of mistakes as well. But, you know, I'm only human and trying to interpret this very complicated market to the best of my extent. And that we then eventually would drop, and that's what we did. And then I think somewhere late July or so around there, I was looking for the NASDAQ to bottom at around 18,200, 18,300. Well, we got 17,000. Yeah. So I was off by 4 or 5%, which is not very accurate. I got the direction right, but the magnitude wrong.
Okay. Well, yeah, enough history.
Yeah, enough history. So let's look at the market. Joe, again, if I talk about waves, I want to point out that I apply the Elliott wave for those people who are not familiar with it.
Okay.
Which views bull markets as 5 waves up, and then corrective markets as 3 waves down. And we apply a Fibonacci world to it, where the waves are related to each other based on Fibonacci extensions and retraces. And Fibonacci is a whole different other story. Please look it up yourself, or go to my website, read a little bit about it. But you know, a little bit more history back when I did my interview in May with you guys and with Blake, because I know you were out sick, and sounds like you're all better. So that's very good to hear.
Maybe internet stuff, but yeah, okay, yeah. It's good to be back with you. Whatever.
Right, thank you. Likewise. No, I always look forward to this. This is such fun to do. And so back then, I was like a little bit trying to think outside the box of a ending diagonal larger 5th wave. I didn't see it covered by many Elliotticians that I follow, probably only 1 out of 10 or something. So I thought, you know, this is different. Let's kind of go against the grain and against mainstream what people are seeing. And unfortunately, it kind of got blown out of the water. So this was wrong. And I admit, when I'm wrong, I'm wrong. And so we were back to a what we call a standard impulse since the infamous October 2022 low. Yeah, that's when the market bottomed. It's already that long. And since then, it seems to impulse higher. And you know, I did an interview way back in 2023 when we were looking for a top in about the 5,000 region. And that was simply based, again, on the ideal Fibonacci target zone for a fifth wave. And the market decided to blast straight through it. That doesn't mean the Elliott wave doesn't work. It simply means that the market has different intentions and it can always extend. And that we just don't know beforehand. I always say, right, we're not prophets. We cannot predict the future. I can only forecast it based on these standard patterns. And here, for example, we have a standard pattern that did work well. We got a top here in the 176 to 200% extension, but it was for a third wave, which normally goes to 138 to 160 to 1.8. So, okay, that's fine. We're still tracking an impulse lower. So we believe that the low here,
you have the
was a fourth wave.
Okay, so it
was
looks
a fourth
like
wave.
Right. And you have targets.
And that we're now potentially in a fifth wave.
I was going to say, I've seen similar targets by other Elliottians, 6,100.
Yes. Yeah, somewhere in the 6,000. There's some people out there that, 2-3 years ago, I would have laughed at them saying 6,000. Literally, me, myself, and I would have said that's ridiculous. Why? Because based on my FIB work, I thought 5,000. But here we are. We're already in 5,600. Well, so be it. That's why we say we anticipate, we monitor, and adjust. It's just like when you're a doctor and you have a patient, you come in and as a patient, he'll assess what you have. He'll prescribe a treatment, and we'll monitor the treatment, see if it works. If it doesn't work, you have to adjust the treatment. There's nothing different to analyzing the markets, because markets are nonlinear.
That's why they call it a practice.
Yes,
they're practicing
yes.
on people.
True. It's absolutely true. That's what it is. And it doesn't mean medicine doesn't work. It works.
And Elliott wave is a practice.
It is a practice, and it works. It's just that we sometimes misinterpret the markets, because the market tries to keep its intentions hidden for as long as possible. But eventually you figure it out. The nice thing is with Elliott wave that it's price based, and price is the only thing you trade, and price is the only thing that makes money. So there's no external circumstances. So we don't really have to worry too much about, what if Powell says this or Powell does that. Most of the time it can be projected by simply looking at price. But that said, going back to your liquidity point of view, so here are two measures. This is the money flow here at the bottom of the screen, the money flow indicator and the Chenke money flow. So both track how much money is flowing in and out of the market. If it's green, it means a lot of money is flowing into the market. And here as well, green. If it's red or below 50, a lot of money is moving out of the market. So what you can see here is that in early 2024, a lot of money was moving into the market. When that happens, eventually you'll get a pullback, because you can only put in so much money till it doesn't work anymore, right? If everybody's bought, only selling is left. So you can see now that the higher we go, less money is being put into the market. That's negative divergence. Divergence is a condition; it's not a trigger, because price can just keep on marching higher. But we saw the same things happen before. I can go further back in time, this negative divergence. So there is a liquidity problem. Look where money flow was here. This is typical for a third of a third wave, where everybody's bullish and everybody's pouring in money. And now we're going higher, but less and less money is being put to work. And it's, of course, institutions that literally have the biggest pockets, not us mom and pops and private little retail traders.
I wanted to get your view on this, and we're both technicians, Arno.
Yes, correct.
I know enough about Elliott to be very dangerous. Okay, but did you have? What's your impression that over the last month or so, that there's really been a lot of money moving towards risk-off assets, bonds? Bonds have outperformed the market. Gold has outperformed the market. Staples have outperformed the market. It seems like maybe the big money can't do it all at once, but they're starting to shift maybe away from what they've been doing for years and into things that they haven't been doing for years. Safety.
Yeah. I agree. I also follow gold and gold miners, but they have been in a longer term bull market already. But it's still bullish. I remain bullish on those, and can see that buying is starting to tick up on that one as well. So that's pretty good. The very risky assets like the cryptos, they're a little sluggish, though I do expect higher prices eventually. But they've been pretty sluggish. They topped in March, and they haven't gone anywhere since, pretty much.
That correlation's broken down with the market.
Yeah, as well. Sometimes they
Yeah.
correlate really nice, especially with the tech sector. And now it's trying to reestablish itself. But there were some surprises, especially the August 5th low, which even I was like, that's.
I could see a few new highs in some of the MAGAs. Like, I think that NVIDIA is going to make a new high.
Yeah, I think
But
so too.
I'm not sure about Amazon.
I'm
not sure about Microsoft.
No, Google looks a little sluggish.
Yeah,
Tesla looks a little sluggish. Everything looks sluggish. Like there's not a lot of drive behind it. Some of the price action is
we might have huge retracements as the Nasdaq makes a new high, when it makes a new high. But the leadership, I don't think will confirm it at 6,100. Do you?
That's a good
be something to
canary
watch,
in the coal mine. For sure.
Yeah.
Let's look at the big leaders. Have they started lagging? Because it's a certain type of market. It's a market environment, and if the environment has changed at the top, it means things have been going on that are either going towards defensiveness. I look at the utility sector, for example. Is that one up, or other very defensive stock sectors? Look at gold and bonds and those things. It's very good to have a wide view and broad view and understanding. Eventually, when you get a market crash, most of the time everything goes down, even gold and bonds. Everything gets sold because anything that's on the books is a risk. But that's so much further down the road. And
does it bother you that we could be at 6,100 in a month or two? Does it bother you?
At all.
No, not the no. Does it bother you that there is a plurality at that level, that a lot of people are looking, when people are looking for a level, it either doesn't get there or melts right through it, is what I've seen.
It could very well be. It could melt right through it. That's why I have this question mark 5, because this red wave 5 can still subdivide into, as we see here for red wave 3, 5 green waves. And we can go to 10,000. Yeah, it could. It might as well. We could just stall at 559.57 here. There's resistance at the pivot, 59.50, and that's it. And everybody that was looking for 6,000 just didn't get it.
How about the Russell? That's where everyone's been looking for the exponential gains this year. That's been nothing but a disappointment, especially that last pullback after breaking out and sucking in a lot of money.
Yeah, so I track it through the IWM, the ETF.
Yeah.
It is a very messy advance, and we still view the advance as either completed, as you can see here, that it's working on a 1, 2, 3, 4, 5 lower already, or we're in a very ugly ABC advance of a larger B wave that will top out somewhere for the IWM at around 230, 235-ish. This has been a pretty disastrous price action since March. This is similar almost to the cryptos. This is pretty disastrous. It just
especially they're up and down, just like the VIX did.
Yeah, it's up and down. This was a very nice setup here, and 3 days later, it really look at these 3 days completely fell out of bed. It probably wrecked a lot of stops, stops are good. Stops, you must have always a stop in place, because what if the 200-day didn't hold as support, and then there would have been a lot of air, probably all the way down to 160 on the IWM, and that's definitely not what you want to sit through, because after that it's begging and hoping for it to go back up. But for now, it does look bullish here. The IWM, it's back above its 20-day, its 50-day, its 200-day Ichimoku cloud. So those are the technical indicators, and that's a bullish sign. As I always say, if we get back above those, if you see on the left, those moving averages and the Ichimoku cloud, it means the trend is higher until it's not. But that's what it is, and it's a bullish chart. And bottoms always occur in a bearish chart and tops in a bullish chart. That's something else. But the trend right now is bullish. That's for sure. Okay. And so we remain bullish, and that's what we're for the S&P 500 as well. So question mark is, was this a wave 4 low? And here we have a detailed daily candlestick chart from the October 2022 low, where we, instead of that ending diagonal, we're looking at a standard impulse. The only thing I don't like is that this red wave 1, which is a degree lower than this black wave 1, is longer in time and longer in price. Normally that's not the case, but it's not a error in the sense that's not allowed, right? The Elliott wave has certain strict rules. For example, the third wave cannot be the shortest, but there's no rule that says the 1 degree lower first wave must be shorter than the 1 degree higher first wave. That's not, but it's a little odd, but I've seen worse things in life. So this counts still reasonably well if my interpretation of this market is correct. What I like here is this red wave 5, based on this Elliott wave count, topped right here in the 176 to 200% extension, right? Just as I pointed out, that's normally what 5 waves do. So that's good. And then we had a fourth wave to about, I don't have it here on the chart, 123.6%.
Yeah, it was much
extension.
worse. And don't you think there was more damage done on this than what happened in April? That's why I'm surprised at the rapid rate of recovery.
Yeah,
was that an easing event? Then the markets turn, because I mean the yen keeps going, kept going lower after the carry trade unwind, but the market changed, I think, when authorities in Japan came in and bought the market after the Nikkei was down 12%. Right. Mm-hmm. They turned it, didn't they?
I wouldn't say it's only them, but it definitely, of course, provides liquidity support and mental support for of course institutions that mainly drive the markets to start buying as well, because they know they have the support of a big entity.
It reminded me of the SVB bottom a little bit,
Yeah, I agree.
Panic.
Yeah, and it reminds
like a bad event created the liquidity for another melt up.
Yes, it does. And those institutions, of course, know more than we do. They see the money flow and orders and all that stuff. And if they know that they're going to be backed by a very large institution like a central bank, they'll buy. And this is clearly what we're seeing. This is strong buying. But again, is this all of wave 5? Fifth waves tend to be very fast and quick and die out also quick, or is this only a 1 of 5? I don't know. I cannot tell the difference. I know if we go below now the August 5 low, then this whole wave 5 is over, because if this is a 1-2 setup, the wave 2 cannot go below the start of the wave 1, which would be the August 5th low. But so far, as you can see, if we're tracking here an impulse, we've not even completed this third wave of the 5th or the first wave. We haven't completed it yet. And we're still kind of waiting for the pullback. So as you can see, I'm zooming in more and more on the charts. This is the hourly time frame chart. So I still think we're going to top out pretty soon here, have a small little pullback and another rally. And then the market there can decide if it only did 3 waves up from the August 5th low, which will make it a large AB wave, because that's still possible. That is a B wave of a flat wave 4. So that's the alternative we're tracking. I can show the email I sent.
Irregular ABC if it makes a new high.
It is possible. We've seen that before in the market. The whole 2018, 2020 price action was a massive, large, irregular flat wave 4, as you can see here. This was the third wave, was the top in 2018. Then we had an A, a B, and a C wave. This was clearly 5 waves lower, so that was a C wave. Right. That was COVID. It was it was an almost picture perfect Fibonacci based impulse lower. And so we're now in this blue wave 5. So this has been a 2-year long irregular flat wave 4. So we could, for example, now see then the same on a smaller degree as well. So then we have just a couple of months or weeks of a fourth wave. Fourth waves are often flats, but we have done 3 waves lower. And as I always say in Elliott wave, after 3 waves lower, expect at least 3 waves back up, because we can get an irregular B wave or we get a new impulse. And some people say, well, which one is it? Well, I don't know. You just cannot tell the difference until you eventually see potential 4 and 5. That's something else. But the B wave looks higher from a trading perspective. The B wave looks higher and the impulse looks higher. So then you kind of go, what's your problem? It's going higher. Does it matter if we label it B? And we deal with that. The market will signal us if it's a B wave or a impulse by eventually holding above a certain price level or breaking below it. And that's why I have these what I call warning levels for the bears here, for example, on the chart, and warning levels here for the bulls on the charts. So if we now start breaking below last Friday's, I believe it was, low, or is it last Thursday's low, it's a warning because that's an important gap up, right? So this is how you stair step. If we then break below another important low and then etc., eventually, you know, there is not going to be another green wave 5. We'll get the C wave lower. Very simple. For now, I think it's a buy the dip environment. The short term suggests we're going to see a few more pullbacks before we get there. And then it's question mark 4, question mark 5. If we get those, it'd be great. If not, then we don't. That's simple. I don't know. I can't predict the future.
Are there ever just maybe one or two alternate counts instead of having, and it probably the counts change with your time frames, right? You get different counts with different time frames.
Well, here of course we go into this very small little gritty waves, right? We're looking here for a micro degree or a nano degree type of wave. Some people like to trade smaller time frames. Other people like to trade the bigger time frames. They just want to trade these B waves. But no, most of the time you have at least one alternative wave count. Sometimes things really get unclear and you have 2 or 3 or even more. It's like, wow, I just don't know what's going on. And that's fine.
So there's kind of a tell to, not to just stand aside when you have more than 1 or 2.
Absolutely. Yes, that is
okay.
Absolutely. As a trader, you say, well, your analyst, your expert is uncertain. Maybe it's time to step aside. It's like going to your doctor. Your doctor doesn't know what you have. Well, maybe you should take it a little bit easier. Or you're going to your lawyer and the lawyer says, well, this is a complicated case. Well, maybe you should take it a little easy in life and wait before till you have a little bit better idea, right? That's why you go to an expert. If I can claim myself as an expert, I think I'm an expert in another wave. But yeah, if we are very uncertain about where the market exactly is,
you are.
Then thank you. Then stay small. Cash is a great position too. If you were in cash,
it's illegal. It's illegal to go to cash. You have to rotate into another sector.
I always have to be in a position. No, please.
You get a red card.
My trading system was mostly in cash during this whole crash, and it's been buying since again. So that's great. We did not have to short or anything. Biting on. Just sidestep it. It's fine. It's absolutely fine. And that's and then when you get more certainty, remember here, I think August 6 or 7, somewhere around there, we said, it's going to drop to about this level. I think I don't even have it on the hourly chart anymore. I was looking for about 200 plus or minus 50 for this low here, and it's been working out elegantly, really nice. I did expect a deeper pullback here, though. I thought we'd drop back to about 52.80. All I only got was 53.50. But again,
are you covering gold now?
Yeah. Yes, we've been covering gold for a long time, and we remain bullish on gold. Here, I'm going to pull up a slide here. Let's see. So this is my Metal and Miners webcast. Right. So this is my first slide from August 3rd when I came back after a month trip. And I said, upside's not done. I think we're still higher than the week after. We're ready to run. Yes, it keeps on running. And we're at the critical juncture in the sense that how much are we going to run? So I've been, since this one, already bullish since August 3rd when I came back, but I've been bullish on it for a long time. It's in a larger impulse. So yeah, we remain bullish on gold for sure.
Okay. And what's the best way for people to follow your work, get involved with you, Arno? How long have we known each other now?
Oh boy. What
do you think? 5 years?
Yeah, 3? At least 5 years. At least 5. That's right there. This is now yes, probably somewhere around there.
right.
Best way to follow me, of course, my website. You can sign up for any of my services that I offer for people, anywhere from the stock market to cryptos to gold. I do trade alerts for ETFs, for Apple. I do trade alerts for Amazon if you so desire. It's secret service. It's algorithm based. You just get an email every day at the end of the day telling you what to do, or you do nothing. It's a recommendation. I'm not forcing anybody to go into any trade. You can do it for any ETF, long to the short term. You can follow me on Twitter at Intel Invest, of course, as well, where I occasionally post stuff. Not too much. It's just kind of a glimpse of what I provide to my paying members. Of course, they get the main dish, and here you just get a little bit of an appetizer. And I post stuff on well-known websites.
When's your next movie? Look at that movie star.
Thank you. Yeah, that's
All
when I
right.
was still young. And
how old is that picture? Come on, be honest with us.
that one is almost 10 years old now.
Okay.
So
I know we all use old pictures. Anyway,
I know. Yes.
You want to change it, and
yeah,
why not dilute
yeah.
why not delude ourselves that we're still that young and we look
I know.
like that? Huh?
I know. I haven't changed that much though. I mean, back there I was
Sure.
probably though I've gotten a few more gray hairs.
We all think
few,
that everyone else is aging but us.
Oh yeah, yes.
Anyway, Arnaud, over the years and you coming here and sharing your work, I want to thank you.
Thank you so much for having me again.
It was great. I'm glad I was here this time.
Yes.
Have a great trading season the rest of the summer into fall, and we'll talk after probably the crazy elections in November.
Oh yeah, that's going to be something. Oh
All
my
right?
God.
So
yeah, let's see.
Hope we can still talk to each other.
Yeah. So for now,
right.
I say it's buy the rumor, sell the news type of rally till proven otherwise. I think that's a healthy position to have, but it doesn't mean we should throw everything in the kitchen sink at it or throw the baby with the bathwater out of the tub. We'll stick with the price levels, but until then, enjoy the ride till it's over.
Check Arnaud out, and
thank you.
Thank you, my trading warrior brother. Thank you, man.
You're welcome,
it's tough
Dale.
work. It's tough work.
It is. Yeah.
Everyone thinks it's a cakewalk.
If that was
let
the
him
case,
try.
wow.
Let him try.
Let
him try. You can't get into the boxing ring without taking one to the chops. So,
right.
Anyway, thank you, buddy. You could join the team in 14 minutes on the Morning Edge. If you're not trading with a community, find one. And good luck today. See everyone tomorrow. Good hunting. Just don't just count your pips, count your blessings. There's got to be something out there that you're grateful for, even if it's not today's trading action. So take care, everyone. See you tomorrow, not Monday. I'm dreaming. Anyway, adios, everyone. Thanks again, Arnaud.